welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you live from India's startup capital, Bengaluru, and we kick off a show with a big voice on the channel. We're talking about Chris Gopalakrishnan, the co-founder of Infosys and now the chairman of Axilor Ventures. Now, Axilor Ventures has been mooted by the likes of Chris Gopalakrishnan, SD Shibulal, and they've been in news this week for launching a new 200 crore fund to invest in tech startups. I caught up with him as well as 3 startups incubated by Axilor right here in Bengaluru to find out about what the focus of the new fund is going to be, what sort of gaps it will address as far as the pre-Series A, Series A is concerned, the kind of themes he will be investing in. And I also asked the 3 startups incubated by Axilor on what really sets them apart, what they bring to the table. Listen in to this conversation.
Axilor was managing the whole process of identification, of managing the investments, etc. But then we decided that it is easier and better for us to create a Category 1 AIF fund so that we can all invest together as one entity. Second, we also saw that there is a gap in the ecosystem to create a entity that will look at seed investments holistically and curate startups for Series A and beyond.
Right.
We were hearing that the Series A funding is actually becoming challenging, not because of money, but because of not good enough companies. Okay. So, and the reason for that is, at the seed stage, it is not just the funds that are important, but we need to provide a complete ecosystem of connect with customers, connect with mentors, and connect with other founders who can actually help with the problems a startup would face early on. So that's what Axilor will bring to the table. Of course, the fund is like the icing on the cake, because now we have much more freedom. Till now, our average ticket size was about 1 to 2 crores. Now we are looking at 3 crores plus.
So slightly larger.
Slightly larger. 50% of the fund will be targeted towards seed fund pre-Series A, and 50% of the fund will be targeted towards pre-seed, which is the accelerator batch, which will continue to support.
Sometimes seed and Series A is still okay, but it's the follow-on funding that people struggle with, Series B, Series C, and this is despite the fact that a lot of VC funds in India have raised money in the last couple of years. They are sitting on huge corpuses. Do you see that changing, sir? You know, this Flipkart Walmart deal, will it sort of bring back some confidence in the ecosystem for people to, you know, reinvest in follow-on funding?
I believe it will improve the situation. It will increase the confidence in the Indian ecosystem because of 2 things. One, large exits are possible.
That's
billion-dollar
right.
exits
it's a
are possible.
validation.
Second, many of the people who would have benefited from this exit would actually invest back in the ecosystem. So we will have now successful leadership from Flipkart, Myntra, etc., investing back into the ecosystem. I think that will also be very beneficial.
One more question on this 200 crore fund. So will it completely come from you and Shibu? Will you also speak to external LPs? How are you going to raise money for
No,
them?
for this fund, we are looking at proprietary capital. It will be from myself, Shibu, Srinath, etc.
Okay, so it's completely going to be
completely proprietary capital.
There's a lot of buzz around, AI and data analytics and ML. But are you seeing quality startups in these categories?
Look at themes like fintech, enterprise, health tech, deep tech. So the themes remain the same, but what we endeavor to do is to identify these themes early on. So for example, 2 years back, we looked at content and what content will do to digital. Pocket Aces is an example.
Right.
We looked at health tech and the AI, the combination. Niramai,
the Chennai-based one.
Sigtuple, another example where we have invested in. Similarly, we are looking at emerging themes, and we want to get to these themes early on.
You run a QSR business, pay to, not just in the top metros, but in some of the smaller cities as well. Take us through the model, because physical restaurant business, people always grapple with margins and costs per unit.
We approached Axilor almost 3 years back in 2015 October time frame. And that was the time when the food tech was going through a slowdown, right? So, there was a time when you approached the investor and said, food will run away. There was a phase that's when we approached Krish and said that this is what we're trying to build as a brand, as a company. And we said, we want to transform the way you cook Indian cuisine, right? Instead of cooking Indian cuisine, we want to make it assembly ready,
right,
so that you can create it at scale. You can make it like a burger or a pizza that you assemble at outlets. You should be able to assemble the same thing at kitchens, right? Instead of having a great chef cooking food at the restaurant, what if you can enable the same model in Indian cuisine format, right? So that's what we approached him for. And when we met Krish that time, so we were discussing internally with, we had met Payal, we had met VG, and then it was time to meet Krish. And we were waiting in the conference room, waiting for him to arrive, and we were thinking that, hey, a $1 billion man is coming inside. Even if he sneezes, we'll maybe make a lot of money out of that. And then he walked in. We talked to him in quite detail, and we're so happy. We're so impressed by his humbleness. He's so rooted. Like, you look at him right now, he's so rooted. And we were talking internally with Ritesh and Abhishek, my other co-founders, that, hey, we don't care how much money they put into us, what valuation they want. We want them to be on our side. And that was the best decision we made. And luckily for us, we got both. We got the money and we got them as well on our side. And the journey has been tremendous for us.
Urban Piper, what problem are you trying to solve?
So we're trying to help a lot of the merchants who are in this food and beverage industry to kind of manage their online presence, where the online presence can spread across your self-branded websites and apps to the aggregated ecosystem. So right now the food industry is going through a very interesting phase where they're slowly, or maybe they have already come to terms with the fact that online is important. I mean, if you consider the growth of Swiggy, Zomato, everybody's suddenly saying that food ordering is important. So what we started off was that we were building a platform where merchants can deploy their websites and apps in a very quick manner. I mean, like, you can get online in about a couple of weeks time. You don't have to go to another, look for services partners who will build it for you from scratch.
But do you see customers coming to standalone, say, restaurants, and people don't download too many apps. They would perhaps have a limited number of apps, and India also has a very high uninstall rate.
Correct. So the thing is, like, on one hand, since we are a B2B SaaS company, we don't take particularly a position on where the market is going to go, because I have a very simple analogy to your argument, which is basically, if you think about aggregators, they're like malls.
Right.
If malls were the only way to make or sell through shops, then basically independent shops would not exist. So brands have a perception that they are bigger than the aggregators. So we are dealing with a lot of brands. I mean, so for example, Chai Point, Chili's.
Right.
Recently we had a very big sign up with another major chain across all of India. So what happens is, these brands, they realize that they realize that, okay, I have to have Swiggy and Zomato as a channel, but I am bigger as a brand as well, because I can attract because the benefits that I want to pass on to my merchants, customers, that's going to be significantly higher. The benefits which I would save by not passing on to an aggregator is what I'll pass on to the customer.
So you decided to start up right after graduating?
Yes.
You didn't want to gain some work experience?
It's basically, so we were in Delhi University, me and my co-founder, we were classmates, and it actually, all of this came very naturally to us. It was not like we made a conscious decision that I don't want to gain work experience, but it was more like there was nothing else I saw myself doing than having my own company, building my own team, expanding markets, selling something that I've made. And that was what was extremely interesting to me, and that's what I wanted to do. So that's why we started right after college. And
right, and tell us a little about what Serveeder does.
So Serveeder is a customer experience management solution. We have a SaaS product which enables other businesses to understand and act on the opinions of their customers. What that basically means is that any sizable business gets about 1 million different feedback data points across different channels and managing them and actually replying back to their customers, or even drawing any kind of actionable insights out of it, is extremely difficult. So we have a text analytics platform which also basically crunches all of this data, all of this unstructured textual data within seconds, and churns out deep insights for the business or our client to take actions upon it to improve the level of customer experience that they're offering to their customers.
Right. What's the one thing that stands out for you from an Axilor perspective, from a Chris perspective?
One thing I would say about Axilor is that they make you feel very comfortable to begin with. They do not coach you, but they guide you. So just like they said, there's a lot of comfort space, there's a lot of room to make mistakes, but at the same time, I always feel that unlike other investors, because I did the rounds, the whole, while fundraising, we went everywhere. But unlike other investors at Axilor, I felt like there was always this cushion that you can back on.
So, all three of them said a lot about what they learned from Axilor and you. What did you learn from entrepreneurs who've been part of Axilor?
It's amazing to see, the confidence that they have, the willingness to actually explore new things, explore new ideas, explore new avenues. So the confidence is amazing to see. If I look back and think about how naive we were when we started, they're far ahead at this point. The second is they're actually ambitious also, and they want to actually grow much faster. They feel that they can compete with the best. They can compete with large multinationals, and they feel that they have the knowledge, the capability, and of course they have the product, the idea, the company that they have. All of them have been successful in raising future funding, and so I think they will do very well.
Welcome back to ET Now Startup Central. Now, Friday is never complete without our Friday funding meter, which is why we have Arun Natarajan joining us from our brand new Chennai studio. Arun, thanks. Welcome to the show. We had a fairly long conversation with Axilor to understand the intent behind that new 200 crore fund that they announced this week. But take us through the overall funding action this week in terms of, the number of deals. What really stood out for you?
Sure. I think I would describe this week as a very interesting one. We saw something like 7 investments, venture capital go through worth about $37 million. The interesting part is that we are not counting, 2 investments, one in e-commerce, firm eShakti, as well as, cyber security firm Network Intelligence as part of this, because they were actually led by private equity investors. So if you were to actually add up these 2 investments, the value goes up to even above $50 million. So very strong week. And like we've seen in recent weeks, one large venture capital investment did dominate. So in this case, it was the SME lender Avail Finance, which raised as much as $22 million, led by Google's growth capital investment arm, Capital G. And that's not to say that, there haven't been other interesting investments. There was a $3 million Series A investment in Daily Ninja, the daily needs delivery company, invested into by Sama Capital and existing investors, Sequoia Capital. And then I also, kind of came across a very interesting company in the industrial IoT space, Infinite company out of Pune, which again raised investment led by Mayfield, as well as, guess what, another Chinese VC entering India for the first time, GSR Ventures. So all in all, I think it's a very interesting week with a good mix of investments between both B2C and B2B kind of, sectors.
Right. Arun, there was also an interesting deal between Truecaller and Chiller. What sort of parallels do you see between that and what we saw happening between Google and iFinance?
Definitely, I think, these 2 investments both by Google Capital in A-Finance, as well as Truecaller making an acquisition of a fellow Sequoia-backed company is quite reflective of the Indian market opportunity viewed by these American MNCs. In that sense, our market is much more open than, say, for example, China. So much so they see value in coming in and using India as a base to experiment, and take the lessons from here into other areas. For example, it could be Southeast Asia as well as for example Africa. So it's very interesting to see how just because we are that much more of an open market, we are benefiting as well as one angle, I would say. And clearly Google is walking the talk. If you remember some of your conversations with their executives, they're very big on the SME space, and this is a great example. Of course, this is not yet a tech company, A-Finance that is, but I'm sure with Google getting involved, like we've seen in the case of Freshdesk and others, there's so much more technology that they can bring to the table. Similarly, Truecaller, clearly India is their biggest market, and they will be looking at how to monetize the whole base of consumers they have out here, and this is clearly one step forward towards that. They already have a UPI payments kind of play already there in their system, but this is going to expand their reach to completely all digital financial services. So I think it's a very exciting news that both Google and Truecaller are taking big steps in India at this point.
Right. Thanks, Arun, for joining us. As always, we'll see you next week with all the funding action. But time to end the Friday show with the story that we have from Myntra. They've opened their second offline store in Bengaluru. Rahul Dama brings us details on all the tech that's driving this offline foray by Myntra and the plans to expand offline stores in the next couple of years.
I think every store of ours, we want to sort of innovate on technology. The first store that we actually did, it was all about consumer engagement. This store, we have tried to do product discovery and checkouts, which are the two processes for a customer, and we have tried to use technology to make it completely intuitive and painless for the customer. The big thing the store is promising is a 30-second or less checkout, and it's not like any other self-checkout anywhere in the world. So this is the second store. We're hoping to do 50 Roadster stores now, because the stores are actually doing very well. So we've actually scaled up our ambition around how we do the stores.
Got it. Take us to the response that you've seen for the first store in Indranagar, and the fact that you're opening the second store in a high-end mall, really. Yeah. Because, is the data from the Myntra shoppers that you're seeing that a lot of them are probably concentrated in this area?
Absolutely is. So I think all of the decisions, the store locations, what we do with the data is essentially comes from, for example, we look at search trends and say, where are the search trends coming from which pin codes, and that's how we prioritize it. So we're opening one here, we're going to open one more in Pune, right? And so these are interesting locations, all based on data and analytics. Incidentally, we're also using data in the offline stores very differently. Mm-hmm. So this store, for example, is going to be equipped with computer vision, where we will be able to tell who's coming, how much time are they spending, men versus women, and we'll be able to also know which are the dead zones in the store, so we can actually rearrange the visual merchandising.
Indian shoppers do prefer the touch and feel of the things, while we might order something online, there are sometimes that you actually want to walk into a store. So the idea really driven by the fact that Indians as shoppers are very conscious about where they shop and how they shop.
So I think it's a bit of both actually, right? So I think touch and feel clearly is something that I think is important in fashion shopping. Therefore, we want to provide that. But I think there are lots of conveniences of online shopping, the endless availability of items, the pricing, all of that. So we're trying to bring both together, right? And give the best of both. Incidentally, by the way I think of our stores is they actually help build the brand of that particular brand, right? So Roadster brand is getting built.
What does the screen really do? I sort of, see this. So does it give me real-time information about the clothes really?
It does. So, what do you do when you go into a store? You actually look at the product. You want to see how it looks on a model. You probably go look at it on a mirror. Then you almost always check out the price. And then nowadays, most people go online and check out the price online. We said, why not make this entire experience completely seamless? Why do you have to go to a store associate and ask them? Instead, we built this kiosk. All you do is just place it right here, right? It automatically detects what you've placed, and it shows you everything about the product. You can zoom in, zoom out, you can look at various different looks. You also can figure out what the pricing is. The pricing, by the way, is exactly the same as online and offline, right? The technology to do this, by the way, incidentally, is something that I think is very interesting because it's RFID technology, right? So the RFID is in the price tag, and the kiosks were built by the Myntra Innovation Labs, and it's all been done in-house.
Interesting how tech is going to drive the retail space going forward. We'll really have to see what kind of appetite this has with shoppers, and 200 stores sounds like a very ambitious proposition. But on that note, time to sign off. Have a great weekend. Thanks for watching Startup Central. Stay tuned to ET Now for more news and updates.